want to talk more about some of this year's hottest public debuts. Since their relative IPOs, Uber stock down 27%, as we just talked about, Lyft down 35%, but Slack is up about 16%, and Zoom and CrowdStrike are up big. They're both more than 130%. Those final two companies just reporting second quarter results. CrowdStrike beating expectations on the top and bottom lines and raising its full-year outlook. The stock down just a little bit there. The shares came under some pressure in after hours, indicating some investor concern about possibly elevated valuation. Joining us right now to talk about that hot stock and where all of this is really happening is Andy Nowinski, analyst at Piper Jaffray. Good morning to you.
Good morning. Thank you for having me.
What do you think the company's worth? You saw what happened to the stock.
Yeah, it's certainly down. I had a tremendous quarter last night. 104% growth in ARR. This is a very unique stock in that it's totally a subscription model, no perpetual licenses, no on-premise contribution, no large deals in the quarter. They may have missed or only beat expectations by about $4.5 million in the quarter, but they raised the annual outlook by $15 million. So valuation has come down a little bit this morning, but we still think this is one of our favorite ideas heading going forward.
So what's your target now?
We have a $100 price target on this one, trading at about 24 times forward calendar 21 sales.
How much do you worry, and I know you don't cover these other companies, but when you just sort of look at this vintage of IPOs that are out, and we just talked about some of them being under pressure, and obviously now that there's this news that WeWork and that IPO is under pressure, that's going to ultimately pressure companies like this, or do you think that they're completely separate issues?
Yeah, that's a separate issue. I mean, if you look at the market dynamics for CrowdStrike that they're facing, they really had a positive change in their market. You had 3 acquisitions in the space: Symantec acquired by Broadcom, Cylance acquired by BlackBerry, and now Carbon Black being acquired. That's created a lot of disruption in the marketplace. It allows them to continue taking share. CrowdStrike really has a best-of-breed solution in the space that we think will enable them to continue growing revenue at this pace. Like I said, ARR 104% year-over-year growth this quarter, and that continues to accelerate going forward with that market disruption.
If you couldn't buy CrowdStrike in your space, who would you buy?
Another high flyer we like is Okta. Okta's another one that's growing. It's a 100% subscription model, growing in the 50% range. We think they can continue to grow through the next 3 to 4 years at a very high clip. A lot of these high flyer software names, CrowdStrike, one of them, Okta, another one, are measured on this rule of 40, revenue growth plus free cash flow margin. Okta is very similar to CrowdStrike in that they have very limited competition. The only competition they're seeing is Microsoft, which has an inferior solution. So this is another stock that we really like. 100%, like I said, subscription model with very limited competition. Trading at on a rule of 40 or getting to a rule of 40, ultimately being profitable in about 3 to 4 years.
Let me ask you about both of those companies, because you said you're right. They don't seem to have meaningful competition relative to except with Microsoft out there. What do you think of both of these companies as potential takeover targets, and why do you think they haven't gotten taken out?
Well, I think there certainly should be some consolidation in the security space. I think if you look at any of the major legacy vendors, none of them have a market-leading identity security play. I think they would all love to own Okta. The valuation is a little rich, and the revenue doesn't necessarily move the needle for some of these larger vendors. But this is it is a very good space to be in. I think this is one of the next highest priorities in security is identity.
Does Okta work if it's owned by one of the big guys? And the reason I ask is there's a little bit of an element of Okta feeling like Switzerland right now for a lot of companies.
Yeah, Andrew, you're absolutely right. I mean, you do need to have that sort of neutrality and be able to integrate with all applications, and that's why Okta wins over Microsoft. Microsoft is not neutral, integrating only with Microsoft applications. Okta is the Switzerland. But if Palo Alto or some other vendors were to own Okta, they still could integrate with all applications. That's what makes Okta really unique. Is there a neutral integration with all applications?
Okay.